Pakistan's economy is projected to grow by 2.7% in the fiscal year ending June 2025. This was revealed in the country's economic survey released just a day before Pakistan's federal budget announcement. Finance Minister Muhammad Aurangzeb described it as a sign of gradual recovery, calling it a turnaround story. He said the focus now is on sustainable growth. The government had originally set a target of 3.6% GDP growth, but it was lowered to 2.7% last month. The IMF, meanwhile, estimates the real GDP growth for FY25 to be slightly lower, at 2.6%. But behind the optimism lies a major concern: public debt. Total public debt hit a staggering 76,007 billion rupees by the end of March 2025. That includes 51,518 billion rupees in domestic debt and 24,489 billion rupees, or $87 billion in external debt. That's nearly double the amount Pakistan owed just 4 years ago in 2020 to 21. 10 years ago, public debt stood at 17,380 billion rupees, less than a quarter of today's figure. Aurangzeb said the debt-to-GDP ratio is now at 65%, down from 68%. He also flagged some positive indicators, including a $1.9 billion current account surplus driven by a rise in IT exports. Remittances are expected to touch $37 to $38 billion this year, up significantly from $27 billion 2 years ago. Foreign exchange reserves have also seen a dramatic rise, from just 2 weeks of import cover in 2023 to $16.64 billion in 2025. The state bank holds $11.5 billion, while commercial banks retain over $5 billion. International confidence is growing too. Fitch Ratings recently upgraded Pakistan's sovereign credit rating from CCC Plus to B-, with a stable outlook. Aurangzeb also announced plans to privatize 24 state-owned enterprises in the coming year, after reducing annual losses of 800 billion rupees. Sector-wise, agriculture posted 2.6% growth, construction jumped 6.6%, and services expanded by 2.9%. Pakistan is painting a picture of cautious optimism, but the real test will be balancing growth with its mounting debt crisis. For more such in-depth breakdowns, don't forget to subscribe to our channel, The Indian Express. Hit the bell icon for real-time updates on South Asia's economy and politics.